Foreign investors are rushing to withdraw from China, yet the Chinese Communist Party claims China's GDP growth in the second quarter was positive. Citizens ridicule the CCP's contradictory statements. China's largest real estate company, Evergrande, was removed from the Hong Kong stock market. About 70% of Chinese wealth comes from the housing industry. What will happen if it crashes? We take a look at China's housing companies. Now, mistreated employees are rebelling and siding with protesters. China-backed Confucius Institutes are persevering on US campuses. They suspiciously avoid topics like the Tiananmen Square Massacre and hail Mao Zedong as a hero. Let's get into it. Welcome to Sound of Hope News. My name is Daniela Wolensack, and today is July 19th. Bloomberg reported on July 17th that foreign investors are rushing to withdraw funds from China because of Xi Jinping's zero-COVID policy mistakes. However, the CCP's National Bureau of Statistics still claimed that China's GDP growth in the second quarter was positive, which conflicted with data released by the Ministry of Finance. At the same time, a schematic chart amused netizens, ridiculing the CCP for lying and contradicting each other. The report said that Xi Jinping has resorted to a series of measures, such as sweeping down some of China's largest companies and changing laws and regulations at any time, as well as the economic losses caused by the zero-COVID policy, real estate slumps, and Xi Jinping's close relationship with Putin and other factors. All of this has made many foreign investors decide to leave China. The chief of Ruffer LLP, Matt Smith, said the supertanker of the Western capital is starting to whistle and leave China. Ruffer LLP is an investment consultancy with assets of $31 billion. The recent data from China Index Research Institute shows that the sales of China's top 100 real estate companies in the first half of the year fell by about 50% year-on-year. The data released by the Chinese Ministry of Finance on July 14th also showed that the fiscal deficit in the first half of the year was as high as 5,053.4 billion yuan, much higher than the 700 billion yuan in the same period last year. Former associate professor at Beijing Capital Normal University, Li Yuanhua, said, "From these economic data, we can't see any economic growth, all of which are down or even cut in half. So where does the increase come from?" So the CCP has fabricated some personal income tax increases. Li Yuanhua added, "Everyone was in lockdown. How do you increase personal income tax?" The official data shows that Shanghai's GDP fell by 13.7% year-on-year in the second quarter. Jilin fell by 4.5%, and Beijing fell by 2.9%. In addition, an article on the internet by the author of The Doctor Candidate made everyone laugh. The paper had a chart released by the Bureau of Statistics. The graph shows the GDP growth rate in the first quarter of 2021 and the first two quarters of 2022. At a glance, although the overall trend is declining, the curve is still stable. But if you look carefully at the horizontal and vertical axes in the chart, you will find something weird. The chart did not use 0 as the coordinate origin, but -10. This way, even if the growth in the second quarter of 2022 is only 0.4%, this picture gives people the illusion of much higher than 0. The author also hand-painted a graph based on the 0 axis, which shows that the GDP growth in its second quarter of this year is almost close to 0. Professor Xie Tian from the Icahn School of Business at the University of South Carolina said that although China's exports to Europe and the United States have increased yearly, imports have barely increased. Based on the large-scale decline in other industries, the Chinese economy can't have a positive growth in the second quarter. In the long run, the Chinese economy's reliance on European and American markets, foreign investment, and infrastructure has ended and is destined to decline. Hong Kong Stock Exchange recently announced it will remove many Chinese real estate and property management stocks from the Hang Seng Index starting July 11th. The stocks will be liquidated at the lowest price of the system, 0.0001 yuan. It means the market is abandoning these companies. Among them, the big attention grabber was Evergrande, which is the largest developer in China. The bad news came ironically not long after its CEO boasted that Evergrande would become bigger and stronger, and Evergrande would also produce 1 million new energy vehicles in 3 years. However, Evergrande had too many incomplete homes that clients had waited too long for, as well as bad bank loans. Other major real estate companies removed from Hang Seng included Sanak, Shimao, Kaisa, Huoyuan Holdings, Color Life Services, and Aoyuan. Former UBS economist Jonathan Anderson once called China's real estate industry the most important industry in the universe. Today, homebuyers of at least 100 projects are stuck with unfinished constructions in 50 cities. The cash-strapped developers have not been able to complete constructions. The homebuyers are now refusing to pay their mortgage. Initially, it seemed to be just a problem with the Evergrande group, but it has now turned into a national crisis. It is likely to impact most of China's real estate developers, big financial institutions, and those who had put money into the housing market. The estimated current outstanding balance of mortgage loans nationwide is about 46 trillion yuan, and the loan balances of distressed developers are about 13 trillion yuan. Chief China economist at Pantheon Macroeconomics, Craig Bottom, commented on the situation. Chinese real estate market has been deteriorating for a while. Home price sales and construction have been in terrible states, and they're getting worse. Mortgage lending has been a common practice in housing transactions, so it will certainly hit the financial markets. According to reports, the government is implementing some measures to prevent more home buyers from stopping mortgage repayments. Xi'an Housing and Urban Development Bureau was one of the first agencies to publicly address the issue. It has announced that any developers who fail to deliver homes on time will be punished. But whether such action is helpful or not remains to be seen. Real estate accounts for more than a quarter of China's economic output. Bottom indicated that about 70% of people's wealth is in the housing market, and among bank loans, 30 to 40% is related to the housing market. Land sales account for 30 to 40% of local government revenues. If the real estate bubble bursts, the whole economy will be in grave danger, and the bubble seems to be bursting. Vanke, a real estate company in China, is facing protesters unwilling to pay their mortgages. Vanke used to be the safest of the real estate giants. The owners of a Vanke development in Nansha District, Guangzhou City, issued a statement announcing the mandatory stop payment of loans. Even employees are siding with the protesters. For Evergrande, some smaller suppliers in Hubei province announced on July 15th that they would stop paying loans and stop working. They joined because they rely on Evergrande and make Evergrande a lot of money, but are often paid back with blank slips. They then have to sell their properties to repay their debts, and they don't want to do that. These enterprises jointly announced that the whole industrial chain is now in a state of panic and announced that if everyone stops paying loans, the resulting supply chain crisis will trigger a chain reaction and the consequences will be borne by Evergrande. The Chinese Communist Party's solution to the loan suspension crisis is to force banks to continue to give loans to real estate developers and to build and prepare for the delivery of buildings. They want to wait for the 20th National Congress to first finish. But now the issue is spreading faster than the Chinese Communist Party is aware of. On July 18th, Xie Jinghe, chairman of Caixin Media, wrote that the collapse of the financial system caused by China's rotten buildings is only just the beginning, and that countries that have borrowed from the Chinese Communist Party in the past and built a lot of unproductive airports, ports, railroads, or highways may experience a domino effect, falling one by one. Xie Jinghe forecasts that China's highly indebted builders' bankruptcy will become the norm. Many banks with serious collusion between government and business will be in jeopardy. The emergence of non-performing debts will intensify. When Japan's real estate bubble burst, it spent 30 years adjusting. China's bubble is bigger, and the crisis is just beginning. Confucius Institutes appeared in the US in 2005. They came under strong scrutiny during the Trump administration. Evidence showed that these US-Chinese cultural exchange centers were funded, guided, and staffed by the Chinese Communist Party, allowing the regime to spread through soft power, according to Newsweek. The CCP's ambition is to dominate the world. One of its techniques is to build non-hostile relations with other countries, to penetrate, exploit, and influence them. Confucius Institutes are one of the Chinese regime's long-term tactics. The West, however, has been willing to comply for decades, both out of greed and naivete. Director of Policy, National Association of Scholars, Rachel Peterson, said the Confucius Institutes were covert threats, working to co-opt American colleges and universities, Newsweek reported. They teach Chinese language and culture using Chinese government-approved materials to promote the CCP-favored narratives. Information about the regime's tyranny and brutality are suppressed. The author of America Second, How America's Elites Are Making China Stronger, Isaac Stonefish, pointed out that an epidemic of self-censorship at US universities funnel students away from topics likely to offend the Chinese Communist Party, such as the disastrous Great Leap Forward from 1958 to 1962. The Great Leap Forward enforced collectivization in the towns and countrysides of China and resulted in the deaths of 30 to 50 million Chinese. Study materials also promote Mao Zedong as a revolutionary hero and pretend there was no Tiananmen Square Massacre. The head of propaganda for the CCP, Li Changchun, once confirmed that the Confucius Institutes are an important part of China's overseas propaganda setup. Since 2005, more than 100 institutes have opened at the universities in the United States, including Columbia and Stanford. Furthermore, there are Confucius classrooms in an estimated 500 primary and secondary schools. In acknowledgement of the Institute's threats to academic freedom and opposition to telling the truth about China's persistent violation of human rights, the Trump administration proposed that American colleges and universities be required to disclose any financial ties with Confucius Institutes. The ex-Secretary of State, Michael Pompeo, probed Confucius Institutes, and the Department of Education cracked down on colleges' failures to report foreign gifts. This was reported by the National Review. The National Association of Scholars said President Biden should enforce existing laws. Congress should make Chinese government funding less attractive to colleges and universities by instituting a tax on Chinese gifts and contracts and prohibiting federal funding to colleges and universities that enter research partnerships with Chinese universities that have connections to China's military. Thank you so much for listening. If you like what you saw, please remember to like, comment, and subscribe. See you tomorrow.